Good morning, guys. This is Pete from Pete'sTwoCents.com. Today is January 20th, 2010. A little bit of a grim day today. We're at 180 points down on the Dow. We're approaching 200 points. The volume is increasing in the selling pattern. So it looks like we may hit 200 points, but this is something that we've been looking for maybe over a month, 2 months. I welcome it pretty much because we need a little bit of a break as far as a deep pullback to so we can get the bulls can get back strongly after this pullback and get our legs get them real strong again and start moving upward and onward. So with that said, we are approaching 200 points. If you have stop orders in some of your position and you got stopped out, great. If you picked good stocks, strong dividend stocks, defensive stocks, you probably didn't get stopped out, and it's holding its position, or maybe it dipped a little bit, but it didn't stop you out. Usually, strong defensive and high dividend stocks have that ability on even a downward vacuum like we're experiencing right now. As far as my trades, we're looking at Costco here on a 6 month chart, ticker symbol COST. I did get stopped out. Okay, so that tells me that Costco is still feeling downward pressure. It is having a support level right here at this point. I got stopped out a little bit before that. If it turns around, great. I'll buy back in. I didn't trust it, or I'm not going to play with it to lose more money. I call it a loss and I move on. So if it turns around, I may or may not play with it. And the reason why I made that decision is we're looking at the 50-day line here, and you'll see there was a lot of negative pressure and continuing negative pressure. But I said, hey, Costco's a strong stock, as I've been saying. And guess what? Fundamentals are strong, dividend is strong, but it still didn't move forward. And my concern, trading below the 50-day, if I move this down a little bit, this chart down, you're going to see it's a hell of a drop to the 200-day moving average, all the way down to $53. I don't want to play that game. If it's going to dip from 57 to 53, let it do it on somebody else's time, not on mine. Not on my watch, at least. Okay, so Costco, I stopped out. Hopefully, you had a stop order. As I told you, either two things were going to happen. They were going to blow forward toward the 50-day, or we were going to get stopped out. Unfortunately, we got stopped out. Let's move on to the next stock, which is PBR, which is also, hold on one second. Let me get this in order here. I don't know what's going on, but always my charts give me some trouble sometimes when I'm live. Uh, let's go to PBR. So we'll see here on PBR, same chart, 6 month chart, and we are moving. We're having downward pressure, and I told you guys this the other day. We were going to have downward pressure, or it was going to turn around depending on what happened in the market. And these, these down days and very strong pullbacks sometimes get us with our pants down, even though we've been expecting it. We don't know when. Okay, we can also, we've been saying for the last 2 3 months, oh, it's going to pull back, pull back, pull back, and it took 2 3 months to come into effect. So don't panic in these type of situations. If you put your stop orders in and you build the position, you're not going to get hurt. You're not going to feel any pain because you're not over bought on any position. Okay. So with that said, we are pulling back, downward pressure on PBR, which is Petrobras, ticker symbol PBR, and we are approaching the 200-day there. It may hit the 200 or a little bit above, or it may not. What happens is two things. If it starts turning, I just bought some more shares, so I'll let you know. Full disclosure, I just bought now at a dollar. It's down $1.67, over 3.5 points down. I bought some more shares. I think it was at $1.57 down. Okay, that's enough for me to buy some more shares and continue building my position. I'm gonna let it ride. I still believe in the stock, strong fundamentals, strong dividend. If it approaches the 200-day, at that point, right around, let's say a little bit above 42.75 maybe, 43 and change, I'll buy some additional shares. If it falls below the 200-day on this area here, maybe 30, 40, 50 cents below the 200-day, then all bets are off. I'm going to place my stop order right around that point there. And if it falls at that point, obviously I'm averaging my price down, so I won't get hurt that bad. But if it continues falling under the 200, 30, 40, 50 cents, like I just said, then I'm stopped out and I got to move on. But, you got to make a living. You got to try. This is the name of the game. You got to take a little bit of a risk. The trick is take as little risk as possible and calculate your losses more than your profits. People look at their profits. You got to look at your losses. If you don't control your losses, you will lose in this game. Okay? Guaranteed. There's no question about it. I've experienced it. I've read it a million times, and I've discussed it with professional traders as well. So with that said, under the 200, all bets are off. 30, 40, 50 cents, let it ride under the 200. I think it should turn around at this point. And if it turns around, let me tell you, we got a nice ride up. So, I mean, it can travel all the way, like I told you, 52. Then we're going to have a resistance point at this level, 52.50. And then from that point, we got a lot of momentum. So this could be a 2-3 month stock trading, trading it, laddering up, laddering down. So in other words, from 44 to 54, let's say just for an average, or $8 or $10, we can make maybe double that, maybe anywhere between $12 and $16 if we're laddering up correctly. All right, guys, so that's my brief for right now. I'll probably get back to you guys in a couple hours. Let me see how the market looks. We are approaching 200 points. Costco's out of the game. And Petrobras, I'm still playing with PBR. And I just built my position a little bit stronger. Okay, guys, we'll talk in a little bit. This is Pete from PetesTwoCents.com. Thanks.